Okay, folks, good morning and welcome to Swing Trading Today. It's a very special day in that we will be beginning a new month, a new quarter, and it's going to be very, very incumbent upon the powers that be in the market to cheerlead this market up higher as quickly as possible to put in that new monthly high, that new quarterly high. So what I'd like to do here is this morning is rather than simply doing a market wrap or doing a swing trading today, I want to take a look at the weekly charts because unfortunately, due to personal obligations, I can't do Thursday night stock charts live tonight. So let's spend this morning taking a look at how we are poised to finish out the week with not one trading day left to go, as I normally say, but 2 trading days left to go. Let's keep that in mind as we review the weekly charts. After we're done looking at the weekly charts and a few daily charts, we'll segue over into the daily charts. We'll also take a look at some members' stock chart requests. So let's get to it. Let's begin with the weekly view of the bond market. Very, very critical. This is the 10-year yield weekly view at current. A brutal week. And we are testing a lower band of support. Stokes are very oversold, but that doesn't mean we can't go lower on the 10-year yield. It just means that the price of bonds are very, very strong. Therefore, the price on the yield is easily manipulated lower. So a down week, we're just off the lows of the week. Daily chart. Bull flag setup. Excuse me, this is still a weekly chart, I apologize, different view. Bull flag setup, we're holding the lower band of support, and this is really a continuation breakout pattern. And to be honest with you, if you take a step back and you look at this from like a higher level view, you can make the argument that you have an inverted head and shoulders setup. Let me demonstrate. Here's your left shoulder, here's your right shoulder, and of course, here's your head with your 45-degree neckline right about there. So we break out above this upper band of this bull flag setup. Yield's going up a lot higher. And I think that's what's going to happen. Unless, of course, we're heading deep into a recession. Daily chart. Now to a daily chart. Okay, so yesterday we spoke about the 10-year yield. I thought that the yield would break because it was pretty bearish, and that's exactly what happened. Where do I think we're going? I think in the short term, we're going lower. These Stokes are butt ugly. We're rolling over down below 50, very bearish. RSI has broken support, very bearish. Ultimate oscillator, lower highs, lower lows. So the 10-year yield under a dramatic amount of pressure. The TLT weekly chart, this is the 20-year bond ETF. I'm going to still stick with this head and shoulders setup. Remember, on the 10-year yield, we had an inverted head and shoulders setup. On the TLT, we have a head and shoulders setup. No coincidence. But at current, the path of least resistance appears to be to the upside for bonds, to the downside for yields. Good for tech. Not that great for the cyclicals. Daily chart. Now, we had broken out the day before yesterday Then yesterday we gapped up higher and we faded off the highs of the session. Volume rose, very heavy volume. Let's take a quick peek at a 5-minute chart to see if there was a lot of selling into the close. Oh yeah, there was. Oh yeah. So this is not mom and pop dumping 100 shares of the TLT. This is institutional distribution at the close. This is what they do. Look at the volume. So you had institutions out there. In fact, granted, this is only a 5-minute chart, so it's very volatile. We took out the lows of this formation. So we had a lower high and then a lower low, but we bounced back to close back above support. So be careful here. Those trading tech stocks thinking that there's no way that yields are going back up. They're going back up. Perhaps not right now. The tips in the short term, longer term, they're going back up. The debt's just too big. The tips, weekly chart. Pardon me as I take a sip of coffee. We are up on the week, about 1/3 of a percentage point. This RSI looks really, really good. Higher lows, W formation, Stokes hooking up. We did see a little bit of a fade off the highs yesterday. It's rough to talk about volume really yet because it's only hump day. Excuse me, only Thursday. Let's continue on with the daily chart. Yeah, here's that fade yesterday. That was volume. Volume rose, but still below average. And again, I think that in all probability, if you take a look at a 5-minute chart, we will have seen selling in the final minutes of trade. And there you have it on volume. So this is institutional money that was distributing shares of the tips yesterday. The US dollar weekly chart, a very strong week. We're right at resistance at 92.50. Who'd have thought that the US dollar would be this strong, despite the fact that in the past year and a half, about 25% of all dollars in existence were printed in the past year and a quarter, year and a half. We have a breakout in RSI, but remember, there's 2 trading days left to go. So a lot can happen here. We're looking good through hump day, but we need to keep an open mind. And remember, 2 trading days left to go. Daily chart, a nice move up higher yesterday, up 0.42%, a pretty big move. The VIX weekly chart, we're up on the week. Daily chart, bearish reversal bar yesterday. We did hold support. I'm liking the ultimate oscillator. We spoke about this yesterday morning. Stokes still look really, really good. Hooking up above the 20 mark. Price action, though, we have to be honest, it's not good. The Dow Transports weekly chart. A down week so far. 15,000 is now a bit of resistance. Stokes are very, very weak. Very, very weak. When you have Stokes trading down below 50 and declining, rallies tend to fade. Rallies fade. Remember, Dow Transport's daily chart attempted a breakout yesterday. You could argue that we did break out. Let's just be conservative and say we just closed at resistance. RSI, higher lows. Volume was good. 2 sequential days of rising volume, above average volume. Stokes looking okay. The Dow Jones weekly chart, a okay week. No continuation move higher after last week's big bullish reversal bar and an inside week last week. Perhaps it's because our Stokes, they're implying that we're losing momentum. Volume, while we still have 2 trading days left to go, you can pretty much tell that it's going to be very, very difficult to even meet the moving average. Hey, good morning, Paul. Happy July to you too. The S&P 500, we do have a continuation breakout here, up over 1/3 of a percentage point on the week. Volume will trend in probably below average on the week. Daily chart. A very tight trading range yesterday. Now, we spent a few minutes yesterday morning talking about these candlesticks, these filled candlesticks. It's an indication of topping action. I think that the price action got a little bit better yesterday. That's a good analogy. An EKG. Smart woman. It looks as though, in all probability, on the S&P 500, we're gonna pump up higher. Expect a lot of jawboning this market up higher. You're gonna hear the people on CNBC. What I mean by the people, the talking heads, they're gonna come on. They're gonna say, "I expect a 65% increase in earnings this quarter," and they don't say to you, "Well, keep in mind that's coming off of a baseline of a year ago when the economy was shut down." So talk to me next year when we try to improve earnings over this year 60%. And what they don't want to talk about is the fact that in all probability it's priced in. Look at the Shiller PE ratio. Look at the Buffett indicator. Extremely overbought market. I shouldn't say overbought. An overvalued market. So don't let these people take parking space up in your head. But anyway, short term, S&P 500 path of least resistance appears to be still to the upside. And what do we have? 5 trading days in a row to the upside. So expect a pause at some point in time, perhaps even this week. How was volume? Volume was below average, but not horrible. IWM, weekly chart, of which we still carry a short position. And I'll share with you, and I want to see how we close out the month. The reason as to why we got short of the IWM. We want to validate that our thesis for being short is still a valid thesis. And to me, yeah, it is. I mean, we're still extremely extended beyond the 48-month moving average. We're leaning up and into the 3 standard deviation Bollinger Band. And you go back in time, you've never been this overbought before on a monthly time frame. And we've stuck with this trade since March. We haven't added to it. Sitting, watching, and waiting for a break. Perhaps it'll never come. We could trade another month sideways and then resume the uptrend, reducing the overbought condition because we're taking the froth off and it's just trading sideways, no correction, and we may have to close out the trade. But as it stands right now, we're going to remain short into the new month, the new quarter, because in our opinion, nothing has changed from when we opened up this short. Volume on the month is pretty good, slightly below average, but it rose versus prior months. MACD histogram losing momentum. JW, Saudi and Russia have reached a deal on raising oil output. We'll check out the price of oil. That should be interesting. Let's see whether or not it's priced in. The Trip Tues weekly chart. Clean breakout on RSI. Stoked a little bit overbought, but still strong. A continuation move up higher on the week. Volume, way too early to make the call here as to whether or not we're going to put in a new weekly lower low. But it doesn't look great. MACD looks strong. Daily chart. We did put in a new daily high yesterday, but we faded. No great shock. These Stokes are extremely overbought. Volume was very light yesterday. So we may get a pause here, but as we rally into earnings, normally you get a rally on tech. So I'm reluctant to say we're going to have any significant correction here. The only situation where I would see that the Tues, which is tech laden, would have a real serious correction is if we saw a sharp a sharp spike higher in yields. But at current, we've already gone over the bond market. It doesn't look like that's an imminent threat in the short term. The banks, weekly chart. A rough week, weak yields, weak banks. I think, though, this is an opportunity. The banks have been given a green light to buy back shares, to issue dividends. When I mean the banks, I'm talking about the money center banks. In particular, Morgan Stanley, Goldman Sachs. Those are our two favorites. So the banks are struggling to recapture support. What's keeping the lid on the banks after all that good news? Look no further than a declining 10-year yield daily chart. Yesterday was a good day, a reversal bar. Volume was light. So no great rush here to go buying the banks. If you're going to buy them for the long term for the yield, I have no problem with that, especially if you believe that yields are going to move up higher, which I frankly do. And remember, tomorrow is Jobs Friday. Non-farm payrolls. If they come out really, really strong, expect to pop up higher in yields. Technology, very strong week. Continuation breakout week over week. This is what? 1, 2, 3, 4, 5, 6, 7 straight week up higher. So the probability of that continuing through the month of July is highly improbable. We're probably going to get a pullback soon. Do we crash? I don't know. Nobody knows. Yesterday, an inside day, a down day, very consistent with what we saw in the Tues. Volume, very light. So the path of least resistance remains higher on tech. Breaking it down to the semiconductor sector, a very strong week, up nearly 3.5%. We're breaking out. Well, I should say, at current, being Wednesday, we have broken out. Do we close there? Not quite sure. But it's looking very, very favorable. RSI has broken out. Stokes looking strong with higher lows as well. Volume a bit meh. I mean, it's going to be really, really difficult for the semis to forget about reaching their moving average, but they're probably on par to come in about equal to last week's volume. And that, if you're bullish on the semis, is not very sexy. But the price action looks very good. Daily chart, very strong price action. A little bit too close to the third standard deviation Bollinger Band for my taste, meaning it's a bit overbought, or they're a bit overbought. Volume rose versus the prior day yesterday, but still well below the moving average. LABU, the biotechs, a rough week. We had a continuation move up higher. We thought that was going to happen last week, but a reversal bar. Volume light. The week isn't over. Perhaps we'll close at new all-time highs for all I know, but at current, with what we do know, the probabilities of us closing at the highs, it's going to be a bit of a stretch, but certainly not out of the realm of possibility. Wrong chart, Pop. There we go. Daily chart. Not horrible price action. I always like to say that all down days are not equal. The two prior days were brutal down days. Those were your long red candlesticks, implying that you would probably get a new lower low, and we got it. The however yesterday is that we rallied back and we formed a doji star formation, a sign of a decision, a sign that this brief downtrend, this brief correction may in fact now be over. Ideally, we get a retest of support, but we're right there. I mean, we bounced just shy of it yesterday. What was the low? 70.50. The low is about 60.90 in that ballpark. So close enough for government work, especially for those looking to sell puts to average down your cost, not average down your cost, but to reduce your basis cost if assigned to you. So I'm still liking the LABU, but I would really want to see a stabilization here and a rally off the lows to show that this weekly chart is not as bearish or doesn't close as bearish as it currently looks. Because if we were to close out the week looking as we do right now on a weekly time frame, that's not good. It looks like a new lower high. But 2 trading days left to go. Let's keep an open mind. A lot can happen. Consumer discretionary's weekly chart, attempting to put in a new weekly high and close there. We're there at current, but not a lot of conviction. Volume very light. Daily chart. An update yesterday, a bit of a fade though. Volume light, but it rose versus the 2 prior days. Ooh, ultimate oscillator rolling over. Yeah, be careful here. Take note of your RSI. You don't really want to see RSI not be able to rally up and through the 70 mark. You don't want to see it rounding below. That's a sign of weakness. You know, yeah, you may be saying, what are you talking about, dude? We've had multiple up days here sequentially. What are you talking about? Well, when you read technical analysis for dummies, they tell you to short a stock or sell a stock when RSI moves above the 70 mark, or in this case, an index. And especially with an index, you want to keep an eye on the exit door. You certainly don't want to go shorting simply because of that, because if you did that back here in August of 20, you would have had your face ripped off. But it's ideal that you at least cross above that 70 mark because it's a sign of strength. Just like you had back here in January. And when you begin to see failure to close above or rally through that 70 mark, you get these sell-offs. And it leads into having new lower highs. Now, maybe we'll recover here. I don't think we will. I think that all of these sequential up days in a row, the probability of us continuing up higher without a correction is highly improbable. So we're going to get a pullback fairly soon. Volume, as mentioned, rose versus the 2 prior days, but still light on the day using the moving average. Excuse me, folks, I need to cough. Take a sip of coffee. Okay, moving on. Energy, weekly chart. A down week thus far. We have resistance at 56.08. This is what I call choppy price action on your Stochc RSI. This is really what I use the Stochc RSI for. I look for this this mess, this hot mess. And JW just put up a read about oil output. Let's take a quick look at our oil in the pre-market. Ooh, look at this. NASDAQ 100 now down over a 1/4 percentage point. Let's take a look at oil. Light sweet crude, shrugging it off, JW. You want to talk about a tell. When Russia and Saudi Arabia raise output, yet light sweet crude, which is Texas Intermediate, jams up higher, I mean, wow. What my read on this is that while the headline may say that their output is rising, that's the clickbait headline, right? That's what the news outlets want you to click on and get you all excited. But my guess is that the anticipated output that the market was expecting from any announcement was less than expected. So that's getting more granular into the news item. That's just a hunch on my part. So this is a very bullish event. Oil output rising, yet light sweet crude moves up higher. All right, we'll do a little bit more research. So I'm not seeing any headlines to drive this. So very, very strong price action. Let's take a look at a weekly chart. So, wow. I'm telling you right now, if this continues, we're going to be at $100 a barrel. This is a monthly chart. I mean, we're over real serious resistance. Yeah, we're going $100 a barrel. There's like no resistance up until 70, let's call it $78 a barrel. If we break through there, we're going up to 100 in a heartbeat. Very strong chart. Back to the weekly chart. So energy stocks, 2 trading days left to go. We have a lot of chop here. Maybe it'll get resolved today. We don't know. Maybe they'll sell oil off. We don't know. It doesn't matter where a stock, a commodity, the price of cupcakes, where they trade intraday. What matters is where they close. Daily chart. A bull flag setup. That's a continuation breakout pattern. Not loving the Stokes. RSI, potential higher lows here. But we know the correlation, ultimate oscillator, very, very weak, man. I mean, this is horrible. We know the correlation between oil and here, XLE and oil at current on a weekly time frame. They're up. They trade in tandem around 86% of the time. That's off some. That was higher. It's come off a little bit. Speaking of oil, we know it's up in the pre-market. There's a proposal on the table that will further discuss the ease 2 million barrels. August. Oh, so that's the driver. All right. And who's doing the easing? Is that OPEC? Oil weekly chart. We do have a new weekly high, but we faded off the highs of the week. Remember, 2 trading days left to go. A lot can happen. Normally we do this on a Thursday night, but again, folks, my apologies. We're laying my father-in-law to rest today, and it should be the end of the change in scheduling, but he was a really great guy, so worthy of the attention. Oil daily chart consolidating very nicely. Lower highs on Stokes. Volume to the downside yesterday, very light. Thanks, JW. So oil on a daily time frame, you know, if you're trading off your indicators alone, which you shouldn't do, obviously, it really in the end it comes down to price and volume. If you're looking at your indicators, the indicators aren't looking great. You have lower highs on Stokes. It can always hook back up, and this gets really bullish because then you have a higher low versus this prior low. But at current, with this snapshot in time, if we did not know about the pre-market activity on oil, you know, the Stokes are looking fairly weak. RSI a bit meh, you know, not wonderful, but certainly not broken. Price action, a consolidation, and clearly the path of least resistance remains to the upside. Volume to the downside yesterday, very, very light. So oil using light sweet crude, watch for the $78 per barrel mark as being resistance. If we break up and through $78 a barrel, we're going a lot higher on the price of oil. Emerging markets weekly chart. We're down over 1 3/4%, and this is expected. The US dollar is very strong. Therefore, emerging markets are struggling. So while I like the emerging market space, it's not ready to be bought yet. Daily chart, a lot of chop here. It's a sloppy chart. Not much to speak about. Let's skip it. All right, moving on to one of my favorite topics, and that is gold. Weekly chart. Yesterday, a rock solid day for gold. And the odd part is that you had the dollar up along with gold being up. And that rarely happens. And that carried through to the gold mining stocks being up as well. We'll go to those in a moment. So I don't want to front run the gold mining stocks. Let's stick with gold. Weekly chart down just over 1/3 of a percentage point. Volume thus far on the week appears to be trending fairly light to the downside. Let's take a quick peek at how we closed out the month and then the quarter. The monthly chart was not good. This is very, very bearish. Now what we want to see here is what we were expecting back here. Back here I was expecting, this is the reason why I have this arrow, a hookup on our Stokes. Now what we're looking for is the possibility of a W formation and a move up higher month over month. But this price action, usually you're not gonna get it. At least not for the month of July. If we get a gap up, we have an inside month, that sets the stage for a continuation breakout for the month of August. And that would be a year. It'll be 1 year August where we had a new all-time high on gold. So the monthly chart was bearish. How his volume was light, but still it was a decent volume month. Let's take a quick peek at the quarterly chart and how we closed out the quarter. An up quarter, up over 3 1/4%. Here's your fade. So we can consolidate, excuse me, we can consolidate within this bull flag setup for quite some time. So no great rush to go buying up gold, but I do think that given the inflationary concerns in this market, if you're looking for inflation, look at the price of oil this morning. Daily chart. You know, good bullish reversal bar yesterday. Stokes are okay. I just don't want to see a rollover here. RSI higher or low. Now we need to see a breakout on RSI to new higher highs. And then people get a little bit more relaxed. But what a month. What a brutal month June was. To the gold mining stocks, weekly chart. A down week thus far. We did rally off the lows of the week, but we're still down. This is the GDXJ, the junior miners, down 1.43% with 2 trading days left to go. Let's check out the monthly chart and how we closed out the month. Really rough month. Really, really rough month. Outside reversal bar. This implies that we would probably see, or we should probably see, lower lows. If we don't, and we gap up higher, and we have an inside month, just like with gold, you know, perhaps that's the bottom. But if we do put in a new monthly low, we're probably going down here to around $42 a share. Quarterly chart. Yeah, they tried to break it out on a quarterly time frame. There was a rejection. Daily chart. Right off the bat, what jumps off the page to me is the GDXJ. Higher lows now and higher highs. We're beginning to break out. We're beginning to hook up. I don't think we're going straight up here. We may have an up day, maybe even up to resistance at 47.81. Then we're probably going to get a pullback and look for a higher low. SILJ, the silver miners, weekly chart. They rallied off the lows of the week. Stokes is still weak. Daily chart. Stokes look great, very similar to the GDXJ. Great price action yesterday, up 3.12%. We are long of the silver miners, but I wouldn't go chasing this rally again. You want to see a rally up and into resistance, a pullback, higher lows, and then a continuation breakout. Then it's time to go jumping back in the water and building a large position. Not right now. No compelling reason. Silver, weekly chart. Actually up on the week. Let's take a look at the monthly chart and how we closed it out. Outside reversal bar, not good. Stokes were very sloppy, but we're trading above 50, and that means a lot to me. Same deal with RSI. You don't want to see your Stokes and RSI trading down below 50 and declining. Daily chart. Great price action yesterday. We rallied up and into resistance. Volume light though. Intercontinental Exchange. We booked profits on Intercontinental Exchange yesterday. So we're out of this. Coinbase. We are long of. I think we're setting up for a continuation breakout here. Still liking Coinbase. Where is Airbnb? There we go. Airbnb, a really good day yesterday. We're long with Airbnb. I think we're moving up higher. This is certainly a reflation trade. I'm seeing a lot more commercial airliners in the air. So very bullish, and I'm bullish on Airbnb. All right, let's JW, well, oil at 75 for the first time since October of '08. Is that a fact? Let's take a look at the pre-market activity. Since 2008, that's a great stat. Here's '08 year. No, we've been up there before, since then. Lights. Nah, it was at 75 back last in November of 2014. In that range. What was the high here? High was 69. Yeah, so it was November of 14. Yeah, Twitter will do that. Okay. Let's take a look at the pre-market activity. The dollar really coming off here. This is a 4-hour chart. The dollar very, very weak. Outside reversal bar. We haven't completely engulfed the prior bar, meaning we haven't taken out the lows. Do we take out the highs? High 92.544. We have. So we've taken out the highs of the prior bar. We haven't taken out the lows yet. Check in with light sweet crude again. Very strong. Let's go to gold. Gold looking very strong here in the pre-market, up about 1/3 percentage point. Very strong. Equities, the NASDAQ 100 down about 1/4 percentage point. The Russell 2000 strong, but coming off the highs of the session. The 10-year Treasury note is down. That means that yields are pressing up higher this morning. Look for, if there's going to be strength, look for strength in the cyclical names, the banks, transports, oil, or energy, I should say. Look for weakness in tech, especially if we get a 10-year Treasury close above 1.5%. It's probably not going to happen today, but this week or next, watch for that close above 1.5%. And I got to do a couple of members charts requests, and I need to get to a funeral. Let's go to, I have 2 to go over here. Folks, we're going to be using TrendSpider, automated technical analysis, 35% discount code below. Take advantage. First up, SPCE, Space, Virgin, for Jim. Let's go to a monthly chart first. I haven't looked at this in a while. Very strong month. A little bit of a fade off the top though. Weekly chart, down on the week. On volume. Daily chart, we broke support. In red, we're holding support in green. Here's the value of automated trend lines. I would wait for a consolidation here. Make sure that this is for real. I would create an alert. Do we break through support? If so, you have lower lows to go. So no great rush to go stepping up here for SPCE. And there's our alert set, right sidebar. Last one, ATOS. I'm not familiar with this stock. Huge breakout. Take off the automated trend lines, throw them back on. There you go. Massive breakout in a monthly time frame. Weekly chart. Bearish reversal bar. But remember, the month is over. Strong month. Rough week. Maybe we'll rally back. 2 trading days left to go. Daily chart. We're moving in towards resistance levels at around $5.97 per share, give or take a dime. I think that this is a pullback that can probably be bought. So wait and see how we close out the month before you get big. The week before you get big into this position. But I think you could start staying very, very small and nibbling. With that, folks, I gotta run. I would love to take more requests, but I gotta get going here. Everybody have a profitable trading day, and I will talk to you soon. JW, you're welcome, pal. Be great.